Welcome back to Game Trader, the video series about investing in the tech and video game industries using stocks. I've kind of narrowed it down to some publicly traded companies that you can buy here in the United States, as most of our viewership and readership is based here in America. I do have some international companies here that I used ADRs to approximate, because my trading software doesn't really use Japanese symbols or other things, so bear with me with stocks like Nintendo or Sony. But yeah, let's get into it. Last video I posted was in October. Things looked a lot better back then, and we experienced a huge sell-off since then. Basically, the S&P 500 fell. Now I'm using the SPY, which is an ETF that approximates the S&P 500. It fell from an all-time high, right, of $293.94 down to $233.76. And it did this in about 3 months, with the sell-off intensifying in December on the back of a combination of things, really. It was a trade deal with China that wasn't looking like it was going to go through, and then the government shutdown, which intensified at that point. So yeah, we had a pretty rough end of the year that knocked down a ton of the stocks that are in our coverage universe. So I kind of like to look at the S&P 500 just to give you a frame of reference of what the overall market did in that time period. So you'll see here it traded inside month of that huge range in December, in January, and then kind of found its footing again. We're back here around 2,800 on the S&P, 282.48 is where we closed the quarter. I figured this would be a good time to do another video because it was the end of the first quarter. I'm going to try to do these at least on a quarterly basis, because when you have quarterly signals, or at least risk ranges for a quarter, that's like 3 months worth of data that you can at least have at your disposal to make investment decisions, trading decisions, whatever. So yeah, this is... let's look at the Qs look kind of similar. They weren't able to stay inside in November, while the S&P did. And, the S&P was green in that quarter, the Qs weren't. The Qs are heavily tech and, higher beta stocks, so definitely got hit harder. A lot of companies in the semiconductor industry were down way more than the markets were. So we'll see that in some charts that I look at later. You can look at the SMH as a whole, which actually peaked not in October with the market. It peaked in March, almost exactly a year ago, before completely falling out of bed at the same time that the market did in October. So yeah, you have stocks that are down materially more in this specific sector of tech, which is semiconductors. And if you go back and you look at the video that I posted in October, I had a warning about the Qs and SMH saying that if they broke certain levels, look out below. It was 100. It was about this 102 level. When it broke that, it dropped almost $15 in a month. Ultimately, dropping down to 80.71 from a high of 114 earlier in the year. So yeah, those are some of the indices that I look at. That's the broader market, but let's look at the individual stocks in our coverage universe. Apple, yikes. This is a bad chart. I got no signals here. You have no monthly signals. You have no quarterly signals. You have no weekly signals. All you have is a stock that hit an all-time high of 233.47 in October, early October, and experienced an outside month and down signal. And really, it sold off from the opening of 219 all the way down to 170 in 1 month. But that wasn't all. Apple... This actually was there was a reason behind this. Apple announced that they were not going to report unit sales of their flagship iPhone anymore. And Wall Street clearly did not like that, punishing the stock to the tune of $90 per share, which is just brutal. The stock, I thought, might find some footing down here in the 150s, which was like a downtrend that I just kind of drew. And I thought, you know, we have a risk range now that we can look at, and the stock's back in between it. There's no reason to buy it here. There's no reason to sell it here. I'm not talking fundamentals in this video. I'm only going to be talking about the technicals. So this is a stock that, yeah, it's gone up for now 3 months in a row. We'll see what happens next month. April is when Apple tends to announce their dividend and capital return policy for the year. So you might get some news in April about how much money they're going to give back to shareholders through dividends. But yeah, it's kind of in no man's land, and I'll get to it in a fundamental piece that'll probably go up this month, where I write about why I don't really think the stock's that great of an investment anymore. But even from a trading perspective, just be very careful. There's not a whole lot of reasons to trade it. Outside that it's a very liquid stock, the options market is pretty liquid, so you can get in and out quickly. But yeah, I won't bore you. Apple, Steve Jobs is dead. AMD is pretty interesting here. So you have an outside month, which you instantly have a new risk range, right? So you have this, and you have this. We want to watch for a break above 2811 and below 2104. That'll give you a signal either way. So you're either going to have a buy signal or a sell signal at the end of this. So yeah, that's the monthly. On the quarterly chart, it's a little more interesting. This stock had a crazy 2018. Even look at this the last 3 years. So it's traded inside quarter. So clearly, shareholders are trying to figure out some sort of price equilibrium for this stock. It had a big move up, and then had a big move down, then it had a big move up. It went up on the Google Stadia announcement, which was kind of interesting. So yeah, you have reasons to believe that they're not going to die. And it's also trading inside its yearly chart. Like I said, it had a massive range of just an insane year in 2018 of $9 to $34, and it's now trading between $16.94 and $28.11. So like I said, in the monthly chart with that outside, just watch this risk range: $28.11 on the upside, $21.04 on the downside. That would be your immediate risk range for the month of April, to guide your trading there. If you're an investor, if you're someone who bought back here, I don't think you really have much to worry about. If you bought it below $5, you're still up a ton. But if you're looking to get into it, or if you're looking to short it, that would be your risk range to pay attention to. But back on that quarterly chart, you want to look at $16.94 on the downside and $28.11 on the upside, for either a buy signal or a sell signal, depending on which way you're looking to go. On to the next one. Amazon. Amazon is trading inside quarter. It just traded inside week. So if you want a risk range to trade next week, which is the first week of the quarter, you got 1745.68 on the downside and 1805.77 on the upside. That's your risk range for the week. If you're looking at the monthly, it traded inside month and then up. So you just finished a buy signal to end the quarter. I guess if it gets back above 18.23 and 75 cents, that you could have a continuation higher. So pay attention to that. But yeah, if you got in here above 1673.06, yeah, you made about $100 per share, which isn't too bad. The company struggled quite a bit, off of its highs. It had a tremendous 2018, where it nearly doubled. So seeing some churn here is not that crazy. And yeah, you have a stock that's still trading inside year. It's like I said, it had a monstrous year where it went from 11.70.51 to 20.50.50. So yeah, we'll see if it can break out of this range. You'll notice a theme here. There's a lot of stocks trading inside year, but granted, we're only in the first quarter. So let's talk about another stock that is not trading inside year. Activision Blizzard. More like Activision these days, but yeah, Activision. Activision had an inside week, but boy, has this been a brutal stock to own. Down from an all-time high of 84.68, it hit a low in February of 39.85, and then they announced they're firing a bunch of people, and the stock has kind of been churning around. It's pretty much dead. I don't think there's any reason to buy this stock, unless you want to trade it on that weekly signal. But if you're really into trading the weekly, you can buy it above 47.88 and below 44, or sorry, sell it below 44.87. I don't think there's any near-term catalyst for this stock, though, so I think it's kind of dead. It's a show-me stock. If, I don't want to talk too much about the fundamentals of the company, but if their best move for profitability is firing people, that's not so great. So yeah, I think there's better stocks to own in the gaming industry than Activision Blizzard. Let's take a look at EA. EA traded inside week. It's also inside month. So if you want to buy it, you want to get it above 105. If you want to sell it, you're looking below 94.13. It's also trading inside quarter, and it's trading inside year. This stock got a stay of execution from Apex Legends. This was that month that they announced it. Things looked really bad right before Apex came out, and then Wall Street heard the phrase Battle Royale, and they're like, oh my god, Fortnite money, so they bought the stock all the way back up. You're dealing with an inside month, like I said, so above 105, you have an actionable signal in April to buy it. Below 94.13, you have an actionable signal to short it. Use those as your stops in either case, if you're going long or if you're going short. But yeah, like I said, Activision Blizzard may not be a great stock to own right now. If you wanted to get into one of these third-party developers, it looks like EA is the one to buy, just on the technicals, and also if you look at just the momentum they have with Apex Legends, which is a free-to-play battle royale, which we're not really sure how they're monetizing yet. I know that there's clearly monetization going on. We just don't know how profitable it is yet, so we'll find that out in the future. On to the worst company in the world, Facebook. Man, I'm just so confused. This stock had every horrible headline all last year, and it kind of just went down this really steep downtrend. So it was on its way to zero if it kept going that way. But what happened in January? They reported earnings, and people are not leaving. People are staying on this website. There are 1.4 billion daily active users, 2.3 billion monthly active users across all their platforms. Despite all the horrible privacy stuff, all the other stuff they're doing with selling your information to different people, users don't seem to care. And I'm not going to fight it. I'm not going to tell you to fight it. There's no reason to try to step in front of this freight train while it keeps making money. It is trading inside year. It had a massive year last year. 218.62 was the high. The low was 123.02. So yeah, this year it's been able to stay within that range. As long as people are going to keep going to this website, and it's the largest display ad company in the world, I don't really think it's going to go down much more. So yeah, normally with with my personal opinion, I don't really like the company, and I think that they've done a terrible job of managing their users' data. But it doesn't appear like the users care, so why should I? So yeah, I think it's kind of a no man's land here in the 160s. There's no real actionable signals. Like I said, it's trading inside year. But yeah, there was a fine buying opportunity here ahead of earnings, where it shot up to the 170s, and it's kind of been consolidating ever since. But yeah, if you want to get long this, just wait a week. Something terrible will happen, and maybe you can buy it in the low 160s or 150s, and then trade it back in the 170s. But I think it'll either be range bound, or we can just wait for an actionable signal to sell it. But yeah, there's a very large risk range here. That downtrend appears to have kind of slowed down, so we'll see what happens after this consolidation. Let's go on to this next one. GameStop. Oh boy. Let's start with the good news. It traded inside day, so for one day, it didn't go down more than the previous day. Let's look at the quarterly chart. Yeah, so you have last quarter, you had an outside, because you see it traded above the previous range to $16.90, and then below it to $10.07. The one thing I like to point out on this very long-term chart, there had been a downward trending line that had served as support for the stock. This is the first time since 2006 that GameStop has broken that downtrend. That's super bearish, and it happened on an outside quarter. It happened when the company announced that they were no longer for sale. Apparently, some private equity companies had been sniffing around GameStop. They decided that it didn't smell good, or that they were asking too much. So yeah, things don't look too good for this company. If it breaks below $10.07 per share in the next quarter, you have an actionable signal to continue to sell it. So that's pretty brutal, but I don't see what would stop it from going lower if that were to happen. If by some miracle it got above $16.90, you would have an outside and up buy signal, but boy, that would be 60%, 70% higher from here, and I just don't think that's going to happen unless some sort of miracle occurs. So yeah, the TLDW this stock is not dead yet, but it broke very long-term support, and that's super bearish. So yeah, I had recommended this on a fundamental basis last year. I was wrong, and I will update our ratings on the fundamental side in an article that will go up later this month. Let's go into a better company. Google, the guys who created Stadia. Excuse me. Google doesn't really have any short-term actionable signals. It is trading inside year. Had a pretty massive range last year and is trading inside of that this year. They did announce Stadia last month, and the stock did hit the high of the year on that news. You had some other companies that sold off on that news because everyone thinks Google's going to take over the world with video games and the cloud. So yeah, no actionable signals really. Like I said, it's trading inside year. A lot of stocks are trading inside year. So you can just pay attention to it, but I don't have no risk ranges to really pay attention to. But yeah, that's all you got there. Google, Stadia. Intel's trading inside year also. Not a whole lot else to look at. It's held up better than a lot of its semiconductor counterparts. Stock hit a high in June last year, 57.60, hit a low in October of 42.32, and then it's back up here in the mid-50s. It's a big boring company that makes semiconductors, but it is more stable than a lot of its competitors, so could do worse than owning them. No real reason to buy them here, and it's trading inside year like a lot of other stocks are. Let's go to the best looking chart in the whole game trader coverage universe. Microsoft. Wow. Just look at that. Just take a look at that chart. So on the monthly, It kind of mimicked the S&P. It went inside the December month, and that marked the buying opportunity for this stock above 107.90. You had to buy. If you bought it in February, you made about $10 already. Company's doing very well. Maybe not the Xbox One division. It's been struggling, but everything else is going great over there with Azure and Office and Windows, and they even announced HoloLens 2 this quarter. Not like that's going to move units or anything, but they're probably I would say they're probably the best tech company from a management perspective, from a diversification of revenue. It's hard to look at this chart and be like, oh yeah, I wouldn't buy that. Look at this. It's just beautiful. So kudos to anyone who's been long this for a while. You don't really have an actionable signal now, but if it sounds dumb, but yeah, if it gets above 120.82, which was the all-time high that happened last month, it's probably gonna go higher. And like I said, I think it's in much better shape than a lot of the other mega companies of its size. You know, Amazon's having troubles, Google's kind of run into problems, Apple has its issues, and Facebook is Facebook. Out of that whole cohort, I really think that Microsoft is the best of breed. So that's just reflected in the stock chart. And after a really long time where it churned between $15 and $35, it's just broken out, and it's great to see. So let's go on to my largest holding, which had a horrible 2018, Nintendo. Nintendo has gone inside month and inside quarter. So maybe, the selling is done. Just maybe. After going inside month and rev strategy down, right? So it went inside, then it went outside back into that range, and then below that. That was your sell signal in April of last year. It did not give us a buy signal at all in all of 2018 on the monthly chart. And now it might be setting up for a buy signal in April above 36.35 and a sell signal below 33.05. So there's your risk range on the monthly chart. On the quarterly chart, it would be a quarterly buy above 39.34 and a sell below 32.02. So we'll see what happens. Nintendo had a terrible 2018. Not like from a functional, like from a business standpoint. I thought they did pretty well. Just from a stock standpoint, I think this stock tends to get ahead of itself. And, you know, it had a massive run in 2017 when it went from, I guess, in 2 years, 2016, July of 2016, stock was $17.45. Hit a bull market, this recent high of $58.45, and it's currently trading at $35.87. So there's hope, Nintendo longs. There's a little bit of hope out there, but hope is not an investment strategy. So there's your risk range. Below 33.05 on the monthly and above 36.35, you would have a buy signal. So if that does happen by some sort of miracle, I will make sure to alert people on our site. But don't hold your breath. It's been pretty brutal. Maybe that Labo VR will be the catalyst we're waiting for. If not, you got Mario Maker coming out later this year and some Zelda stuff too. Here's a stock that got creamed. More than probably any other stock in our coverage universe. Nvidia dropped from 292.76 in October all the way down to 124.48 ish in December. Traded inside month in January, along with the S&P, along with Microsoft, a couple other stocks, and it's reversed back a little bit higher. Still over $110 below its all-time high. And the semiconductor industry it's a kind of, it's pretty fickle. They're very much so tied to inventory cycles, so I wouldn't rush back into this stock. There's a chance that you'll be able to get it back lower from a fundamental perspective. But yeah, you have a stock that's trading inside quarter and inside year, like a lot of other things. But yeah, you had a trade if you got in above 160.88. But yeah, at this point, there's no actionable signal unless it continues to break out above 185. But I'm not holding my breath there. Oh boy, there's another one. Sony. It just resolved a inside quarter and down signal. Or sorry, outside quarter and down. So it traded, it had a decent, third quarter of 2018, and it hit a high of $61. The next quarter, it went just above it by 2 cents, just high enough to be outside on the upside, and then it also went below it. So that's what you call an outside bar. And then the following quarter, this first quarter, it sold off below that previous low. So below 45.64, Sony had an actionable sell signal all quarter. This would continue if the stock breaks down below 41.91, which is not that far from, so I wouldn't be surprised if it happens. They have earnings coming up, so maybe that'll be a catalyst for them. Maybe it'll go inside quarter. But that was a pretty brutal 2 quarters for Sony investors, down almost 30-some%. So yeah, that's a pretty rough quarter for them. And they were another stock that got slammed on that Google Stadia announcement, which was just silly. I don't really understand why you would sell Sony on Stadia, but they did. It's like they forget that they've already sold over 80 million PS4s. But yeah, we'll move on. Another foreign company, Tencent. We added this to the coverage universe last year. Not a whole lot of short-term signals. It is inside year. After some massive moves over the previous years, it had a huge range, and it's inside of it. So, the reason I point out these inside years is that whenever you're inside of a previous range, it is super frustrating to trade these things. So you get a lot of these moves where head fakes, head fake. Even this right here is a head fake. So, it's going to be frustrating to trade these on short-term time frames when you're trading inside of a longer-term time frame. So just be mindful of this. And also, if it were to somehow break down below 31.54 or above 61, you would have an actionable signal there. Well, let's get back to gaming. These guys they own 40% of Epic Games. They own Riot. They own a lot of different things. I think they own part of Activision Blizzard. So yeah, they're a conglomerate. They're the largest advertiser in China. A lot of things going for them. Also kind of hard to really put your finger on them. So that's Tencent. Let's look at Take-Two Interactive. I thought Red Dead was supposed to make the stock go to the moon. Well, it did. Kinda. And then it sold off. Pretty predictably. This happens. This tends to happen with Take-Two. So you have a stock that, they had a great launch of Red Dead, and it's been kind of down since then. You have a stock that is inside month, so above 144 cents per share would be a buy signal in April, and below 85.83 would be a sell signal in April. So that's your risk range to pay attention to and Take-Two Interactive. I think the company's great. There was a rumor that Sony was going to acquire them, which was kind of weird. Because I don't think that would happen, but maybe someone will buy them. I just don't think that investing in a company based on a potential acquisition is a very smart strategy. So don't do that. Zynga. Let's talk about this real quick. Is this stock back? I don't know. You have an inside quarter in the third quarter, followed by an outside quarter in the fourth quarter, and then it broke out above that. So on the technicals, you had a nice quarterly rip above 450. You made about 80 cents per share. So good on Zynga for not disappearing. So that's something. I don't know exactly what's going on there. And this stock, yeah, let's pull it back here. It did hit an all-time high of $15.91 the month after its IPO, or the quarter after its IPO. So it has a long way to go to make their original shareholders whole. But yeah, there's opportunities to get in this around $2 for years, and you could have almost tripled your money since then. So yeah, that's a quick look, as quick as I can make it, at the technicals in the Game Trader universe. We have these inside quarters to pay attention to in the queues. So yeah, below 149.49 would be a sell signal. Above 182.83 would be a buy signal. That'd be a 3-month long signal, so that's something to pay attention to. Same thing goes for the S&P 500. Above 285.18 would be a buy signal for the next 3 months. Below 243.67 would be a sell signal. Now I know these are massive ranges that we're talking about here, so I don't think it's likely that you would break all the way back down below to somehow break out above it. It seems pretty likely that we might trade inside of this range again, and that would actually be fitting considering that we're inside year. So that's why I want to stress this. We are still inside year here, people. And I just think it's going to be really tough trading out there if you're trying to make fast money. So it might be one of these markets where you find the stocks that you like, get your shopping list out. When everyone's selling the market, you buy it. And maybe on days where the market's ripping higher, you take some off. I'm pretty. My largest portfolio has about 50% cash right now because I'm kind of cautious. It's not that I don't think that the market is worth investing in. It's just that I'd rather invest in things at better prices than where they're currently trading. So I'm not super bullish. I'm not bearish. I think the best way to describe myself would be neutral. My largest holding is Nintendo, and boy, has that sucked this year. Or, sorry, the last year. This year, we'll see what happens. But yeah, the Switch is selling well. We'll find out more when these companies report. A lot of companies in this coverage universe report in April, so these signals should be useful come earnings season for you. Make sure you take down the notes for these risk ranges if you're planning on trading these things. Use defined stops. If you're kind of new to investing, talk to a professional. You can tweet at me at TechnoSucks on Twitter, or head over to the Shack News Chatty forum and ask me in our comment threads any kind of advice you need, and I'll be sure to share whatever information I know. Keep it locked on Shack News for financial news about gaming, guides, long reads, content, all sorts of great stuff. And if you liked this video, please hit the like button. I'm Asif A. I'm CEO, Editor-in-Chief over there at Shack News, and thanks for watching.